Alright, so if you didn't catch my last video, you're probably wondering what is going on over here. So it's this simple. Basically, when I started my Topstep journey, my goal was to get into the live funded account, get above $10,000, and take a payout. That was the goal. And along that way, I've learned a few things in the process, and I talked about that in my last video. But the one thing was, which I'm doing now, is what would I do if I started over? So I reflected on that, and I would have started in the 50K account. The 50K account, I think, is plenty big enough account to get where you need to go with Topstep. And here's why. You know, when you start your combine, what's the goal of the combine? What's the goal of the combine? It's to hit that price target and move into the express funded account. So, and if I don't hit those targets and it takes me many months to do it, well, I'm only out the small amount of money that costs for the 50K account, and I'm not paying that big dollar bill for the 150K account. So then once I move into the express funded account, what's the goal there? Is your goal to make money? It's not mine. It's to make it to the live account. So making it to the live account is a different goal than making a bunch of money in the express funded account, because you have to do what they want you to do in order to be able to get to the live account. And they want to see good, consistent trading, growing an account, having good risk rewards, good risk management. They want to see you be a good trader. They don't care if you hit a home run and you make $20,000. They want to see that you're actually a good trader. So showing them that you're a good trader, growing the account, scaling up, managing your risk, doing all those things is what needs to get done in the express funded account. Now, if you do all those things and you're successful, then money's a side effect, right? You can take some payouts. But once you're on their radar as a potential for the live account, and then they eventually move you into the live account, mission accomplished. But now you're only in the 50K account. So you're like, well, I can only take 3 contracts. My daily loss limit's only $1,000. So I'll never really be able to make as much money as I want to make. All those things that I thought in the beginning. But the reality is you can then negotiate your terms as long as you have a track record to prove it. So once you're in that live account, you start trading, you're making money, you have a track record, not 5 trades doesn't count. But, once you've got a bunch of trades, I don't know what that is for them, 60 trades, 100 trades, the account's growing, you're doing everything right, then you can reach out and negotiate a change in your parameters. So the 50K account makes sense to me. So that's why I'm going to start over as if I, brand new basically with Topstep, start over, 50K account, grow it. And then at the end of this 50K account, once I get through my express funded account, I believe they'll just roll it over into my live account. So my live account never gets shut down. So that's kind of the benefit, I think, of being able to go back through and add money to your live account by proving yourself once again through the combine and the XFA and make money along the way. And if you want to still make money and your live account is at risk, well, I don't want to trade my live account once it gets to a certain level, because it's going to be really easy to blow it up. So if I do anything, I'm going to be risking like $50, $100 to try to slowly limp it back. But now I can't really take payouts on that. I need to grow it back. But if I have an express funded account sitting there in the sidelines, I could use that to continue taking payouts. So there is a benefit of having an express funded account sitting in the wings, I think. So 50K account on deck. Now with this account, I'm also going to do a new strategy. I'm going to keep it really simple, just trade off the charts, no technical indicators, very simple basic strategy. So let's not waste any more time. Let me show you what that strategy is, and then first trade on deck. Okay, so let's talk strategy. So just before we do though, I just want to remind you that 2 traders could trade the same exact strategy. One of them could lose all their money, another one could be successful. The strategy has to fit the trader, and it has to fit the trader's trade plan, or it doesn't work. Your trade plan is your map, your strategy is your vehicle. And if it doesn't fit you, your map, all the little variables, it ain't going to work for you. So please don't copy me with the strategy, because I don't want you to lose all your money because you tried to copy me. Second thing is, the strategy I'm going to show you, I don't even know if it's going to work. Right? So that's the next thing. Like, I'm going to try this out for the first time with you all, and we're going to see if this was a good idea or a bad idea together. So if you end up trying to copy me, don't be surprised if you blow up your accounts. I just want to put that out there. It's pure speculation, what I'm getting ready to do. All right, so here's the strategy. I'm only going to trade with just the one monitor, the one chart, and that's it. That's all I should need for this. So I'm not going to put indicators up here. I don't need moving averages, VWAPs, nothing. I don't need any of that stuff. It's literally just what you see here on the chart. So I'm showing you this on Thinkorswim because Thinkorswim has a nice feature that allows you to block out the normal market hours and pre-market. So this gray is all pre-market and after hours. And then the black area in the center here is the normal market hours. So I'm only going to be trading in the normal market hours with this new setup. So this makes it really easy for me as I'm going back through my charts and back testing to quickly see what that time frame is. Next thing is I really only want to trade from 9:30 to 10:30. We're coming into the summertime trading session. I want to trade in the peak volume times, and I also want to be able to have my days to go do things and travel and spend more time out and about and not sitting at the computer. So looking for trades between 9:30 and 10:30. If something sets up a little after, I might take it, but for the most part, that's what I'm looking at. The first one I'm calling the opening shakeout. So I believe when the market opens, lots of things start happening in this first part of the window of the day. 401ks are getting contributed to, orders from the night before going in and out, all this stuff. Lots of day traders are involved. It's a pretty volatile time in the market. So we're going to trade the opening shakeout, and I believe it's because they shake out the weak hands, and then from there the market can go in a direction. So right here, I'm going to start by looking at this first candle right there. That's the candle that sets the pace for everything. So once this candle closes, as long as we have a body in there, and I'll show you something else in just a second. Once this candle closes, I'm looking for the bottom and the top of that candle, the wicks. The wick and the tail, looking at the very top and very bottom. And then I'm waiting for one of those, either the top or the bottom, to get broken by a candle that closes below or above. So in this case, we have a candle that closes below that, indicating it looks like it wants to go down, right? So now what I'm waiting for is the reverse of this to come back up and break above that opening candle. And when it does, I'm going to get in the trade. So once this breaks below, I can set my limit order to get in the trade as soon as it breaks above. Once it breaks above, I mark up my chart. I put my stop at the low of day, in this case, because it's breaking above. I put my stop at the low of day, and my target is 1-to-1 on the trade. I think I can change this around a little bit to where it's less than 1-to-1, like put my stop at the low of just below that opening candle and make that my stop. But I got some more work to do around that. So for now, I'm looking at a 1-to-1. Like if I move my stop here, do I have more losing trades? But does it make me more money because I'm looking at a 2-to-1 most of the time, almost a 2-to-1? Or is it better to have less losing trades and do a 1-to-1? And do I make more money that way instead because I have less losing trades? I got to find that ratio. Sometimes having a 1-to-1 or 2-to-1 is not a good thing. It looks good because you're risking one to make 2 or to make 3. But now if you're losing 20 out of 30 or 40 trades that way, when you could risk one to make 1 and win 9 out of 10 trades, you might make more money. So you just got to kind of figure out which one is more profitable. So I got to do some homework around that still. I put out 6 hours into developing these new strategies for this. It doesn't take that long. When you know how to develop a strategy that fits your trade plan, you can create them pretty fast. And I'm always creating new strategies because my trade plan's always changing depending on what I'm doing. Summer session's coming in, so trading's going to change a little bit. My schedule's going to change a bit, so my trade plan changes. And when that happens, my strategies need to change. So I think one of the most important things as a trader, if you're going to be successful, is learning how to create your own strategies and not be buying other people's strategies that you can't really change, modify, or whatever. All right, so here we go. So first candle opens. I'm looking for a break of the top or the bottom. In this case, it broke to the bottom. I put my limit order in right here. It breaks out to the above that. So I'm in the trade looking for a 1-to-1 on that. If this trade fails, then what happens? Okay, so right here we can see this first candle opens right here. I don't care if it goes up or down. I just need to know what the body is. So it opens right there. I'm looking for a close below or above that candle. And then there's a squirrel on my window. It's awesome. All right, there's so looking for that close above or below. So right here we get that close below that candle. And now I'm waiting for a break above it. I get that breakout above it right here. Jump in the trade. As soon as it breaks, clearly it fails. So once that trade fails, hits my stop, I'm going to speed bump my trade and look to go the opposite direction. So I have my order in just like you see me do already, and then I'll jump in. So once it tagged here, I'd be speed bumped, and my new stop becomes right here, and I got my 1-to-1 to the downside. This also formed up a sloppy M pattern, which also broke at the same time. So you kind of had two trades in one right there, which is pretty nice. So, but yeah, so if it fails, I'm going to speed bump it, and then I got my 1-to-1 to the downside. Okay, back to the chart that I started with. Okay, so when we see this candle right here, basically like a doji, shooting star, like whatever you want to call these. To me, it's all doji because it's indecision candle right there. Zoom in a little bit more. It's still an indecision candle to me, right? Open and close pretty much in the same spot. When that happens, I'm not doing the opening shakeout. I don't have a good candle that I want to go off of. I want to see a candle with a nice body in there. And if I don't get it, then no morning shakeout setup, not doing it. So I'll skip that one. All right, so that's the morning shakeout. Pretty simple, right? The next setup is going to be channels that break out, or fake out breakout channels. So right here you see on the chart, we have this consolidation channel right here. That's pretty solid right there. I mean, it's really, really defined in here. But I got a low of this channel and I got a high of this channel. And then I get an obvious breakout, solid breakout right there. I'm not looking at volume, although let me put volume on here real quick, just curious. All right, so that's exactly what I suspected. So I look at volume, I think, very different than most of you. Like I'm a big fan of look at all the different trading rules that are out there on the internet and then break every single one of them. Like I think as long as I break all the rules, I'll probably be successful. So one of those rules is volume. Like I hear people say all the time, like, oh, it's a breakout on big volume, you know, get in kind of thing. But when it's really big volume, like the volume chart I use, this line that runs through here is the average volume based on a set period. So you can kind of see what's going on. And when you have really big volume, a lot of times I look at it and I say, wow, that's a lot of buyers right there. Are there any buyers left when this candle closes? Is there any left? Or are we only going to see sellers? And all those buyers that came in down here, are they going to start taking profit? That's the question I have. And what I see a lot of times is that when you have this big volume candles and everybody's like, jump in, it's big volume, the sell-off happens, right? So they, you know, that teaching a way to create liquidity for everybody else to be able to pump the market up and then have a bunch of suckers to buy their shares from them as they start selling. So anyway, so I have a lot of different takes on the market, I think, than most people out there. But here we are. This is exactly what happens. We got this consolidation, this channel, got this breakout on big volume, of course, and then it sells off. So once it sells off and it breaks the channel to the opposite side, that's when I want to get in my trade. So, and again, 1-to-1 risk reward. My stop is at the high of that breakout, and then I'm looking for my 1-to-1 to the downside. So one more time, consolidation channel that's very defined, very obvious, very sideways. It breaks out. I don't really look at the volume for this, but I probably should, because that would probably tell me that most likely this is going to fail and kind of give me a heads up. But breaks out to the upside, and then once it breaks to the downside, I'm in short on this trade. It would be the opposite if this broke short first or down first and then back to the upside, then I'm going to get into the break to the upside. So that's the second one, is channel breakouts, fake out breakouts. I'm going to trade those. All right, so the next pattern I'm going to trade is a W pattern. So right now we're looking at, this came down, came back up, made that point, down, up, breaking above that point. I'm getting in the trade, W pattern. Now this one is I call a sloppy W because it's not, it comes up. This one doesn't come very deep. It doesn't come that far back. This doesn't come back down that far where it was, but it's still sharp. It's not rounded out bottoms. It's not a rounded out bottom. So looking for big, sharp W pattern is what I'm doing. And basically just jumping in the break of that point, and then my stop goes to the bottom of the nearest, the last bump it made, and then 1-to-1 on it. So that's the W pattern. Fairly simple, right? So then let me look at one more. Okay, here's another one. Comes down, have this really nice sharp up, sharp down, and sharp up. That's like perfect right there. Set up W pattern. Really, really nice. And jump into the long side from there. 1-to-1 target. So that's the W pattern. If I get into the W pattern and I get in and it starts to drift back down again and it kind of starts just creeping along, then I'm going to look to get out break even as soon as possible. When a W pattern happens, it needs to start breaking pretty fast. But when it starts to creep along, then things could be changing and I want out. All right, so the last one I'm going to trade is the M pattern. So right here, you can see a really nice sharp M and then a break below that point. I'm in the trade, and exactly how I'd like to see it is come right into the target. If it breaks the M pattern and starts to kind of creep along, then I need to start looking for opportunities to get out as soon as possible. But an M pattern, when it breaks, it should break. So I'll be jumping into the M pattern. And again, 1-to-1 right now, but I'm gonna, after I'm trading this for a little while, I'm gonna start looking for opportunities to adjust my 1-to-1 so I can get a better profitability. So if that means stay with 1-to-1, then great. If that means switch it to a 2-to-1, because I can put my stop right at the top of the candle that broke, and I'm if it breaks back above that initial break candle, then maybe I get out. There's some variables there that I may look at as I'm trading to see if there's opportunities to increase my revenue by decreasing my losses. All right, so I'll show you one more M pattern. Okay, so here's another one right here, which also coincides with this candle closing above and then starting to break down below. But I got in early because of the M pattern that showed up. Nice up move, sharp down, sharp up, and then a sharp break below. I don't consider these double tops because they didn't peak in the same proximity as the first high. So sometimes they get close and sometimes they're a little bit sloppy. Double top, I see those as very close proximity to the original high, making a double top. So M pattern is what I would call this. And again, break of that point in the trade, looking for a slide. Now it slid pretty far down, came back up. I don't like that. So now I'm going to start looking for opportunities to move my stop to break even. Gets back down in here, move my stop to break even. I would have been lucky and still hit the target. But a nice sharp M pattern. Okay, so that's the strategy that I'm going to trade going forward, and I'm only going to do it with the NASDAQ on NQ or MNQ, depending on what the risk is, and on the 1-minute candle. So let's put this strategy to work so you can see the trade in action. Okay, so we got a W pattern forming right now on the NQ, so I can come here and grab my risk reward. That's where I'm going to enter. My stop will be just below it. There's my 1-to-1 target. And then if I want to put my speed bump in, I can grab it again. Risk reward. My entry will be here at my stop, and my stop will be where my old entry was. And that gives me my other target. So now my trade is in. See a W pattern forming right there. NQ. Getting ready to jump in. So you can see my account right now. Last night I did some trading, $725. Again, this is a 50K combine. $725. My account is $48,805 because when I got the account, I started working out what the strategy was going to be. You know, there was stuff happening on the chart, and I was like, oh, that kind of looks cool, and yeah, maybe I should jump into that. Looks like it's going down or whatever. Did some casino trading, hit max loss. Next day, still working on the strategy some. And I was like, oh yeah, look at that. Let me do some more casino trading. And then I was about to hit max loss, and I just sold. I got out of my position. I just closed out my position. I had like $150 left before I blew up the account. And I was like, how am I going to trade out of that when I only have $150 left? So I ended up trading out of it, though. So I ended up just, doing what I was supposed to do, traded out of it, and now I got a nice buffer. And the account's up $800 or $650, roughly $660. That was last night. To pull away from that. So now I got a buffer so I can start taking these trades.
Order filled.
Okay, so in the trade to the long side, looking for the target right here. Where's my stop? It's not in. Okay. Sell stop market.
Order submitted.
In Ninja, I always do markets because sometimes they don't get filled if I do a limit order on a stop. Right in a resistance area as well. So right in this little zone is a good resistance area. We'll see what happens here with NQ. I almost want to take my trade off here just because I'm trying to build this account back up so I have a bigger buffer. So I can take bigger trades as they show up. But I'm going to go ahead and let it ride. As some of the traders in my comments have said, stop trading your P&L. Which is so true and so hard to do when you're... I should take it off my screen, but I put it on there so you all could see it. And then I keep looking at it. So yes, I should not trade my P&L. I should just trade the chart. Alright, got into that resistance area. Start struggling here. Alright, so it's struggling. I like to see a breakout all the way to the target right away. And now it's starting to struggle. That's what I was talking about. It goes sideways or struggle. I need to start looking for opportunities to get out. So I'm going to move my stop to break even plus a couple bucks. Still give it a chance to run, but I don't want to take a loss in the trade if this fails and breaks down. Okay, I got a little flag here, so I'm going to move that stop up to there. Still give it a chance to break out. I'm not going to hit close on my trade just yet. M pattern, W patterns, like I showed you in other charts, they'll go a little sideways sometimes, but for the most part, they like to just rip. Okay, if it's going to get rejected again, I'll probably get out. Okay, cool. Here we go. So I hit that first kind of micro target based on the bottom of that candle, but I'm looking for it to get all the way to the main target here. All right, getting rejected. Let's go 30 seconds more before this candle closes and might retrace. I'm going to lock it in more than 90%. All right, cool. More than 90% of the way. Candle's closing in a few seconds. Looking to possibly have a nice retrace. See, there it goes. And I wanted to be out before that retrace took place because I don't want to be stuck in it sideways if it changes its mind. And I almost got that just really close to that full target. So that's going to do it for this account. So 10:30, I'm done trading, which is in about 15 minutes. So a 50K account between last night taking some trades and then what you just saw just now. I picked up $1,236 being aggressive in this 50K. And that's the plan with this account, is to be aggressive and get right into my XFA and then build that XFA account and transfer that money to live. See that big rejection right there? It was struggling. This is a resistance area. And I was like, nope, hit that micro target, which is basically just below this candle right here, the bodies of these candles right here on that W. So good enough. I can only expect that much move, and the bottom of this whole thing to there is bonus money. So it made it within that channel, and I took my profit and I'm out. Had I been greedy looking for a move higher and all the way up here, I'd be going for this ride. Now, will it get up there? It might. I mean, NQ looks like it's going to do all right, but does that mean I might be here for another 2 or 3 hours? Could be, and I don't want to be. So happy to take that profit off, make my money. Down here in the bottom, you can see what trades I took in the evening session as well. $315 in YM, $640 in Q today, and $350 in GC. The 50K combine has a max daily loss of $1,000. So I already hit that max loss, and now my highest winning day is bigger than my biggest losing day, and will always be now that I've been able to make $1,236. So pretty sweet. All right, buddy. I'll see you on the next trade.